Hey guys, it's Vic from Grasping the Market and welcome to our market briefing. Well, today another session packed with volatility. We remain trading around the 28, 40 to 60 area. So no big change on the monthly chart. On the weekly, we approach last week's low. Couldn't take it though. And clearly on the daily, we see that there was an extension lower, reaching very close to the low of the range. And we've been one time framing lower now for a couple of sessions. But this proximity here to this low of the range with almost no excess on the daily time frame is setting up a very fragile structure there. We will get more details about it in a minute when we look at the market profile. Now the session was pretty interesting because, as I mentioned in the briefing yesterday, there was some evidence of the market getting super short yesterday, hammering and hammering and hammering and not being able to extend. We had a massive swing on the overnight, up and down. There was some news about China. Then they took out the news and said something else. It went back and forth. But here's the thing: at the market open, we tried to go lower very hard and found resistance around the 34.50 area. Now, on that push up, the B high came exactly, I mean, it was sold from yesterday's POC. And then after that point, there was some back and forth on the AB period, and it was not able to extend. That told me, well, maybe they're getting in to try to go too far, too fast. And then it came all the way down. And here's the interesting bit. The D low, we started extending lower, tagged to the tick the A low. So at that point, you have a poor low outside the range, which is a very weak structure and increasing the odds that that was going to be taken later in the day. But despite that, there was responsive buying from the A low, and we managed to get back up. And here's where the key piece of information came for me through the session. F pushes, takes the C high, but is not able to reach the B high. And when you see that type of behavior and then F fails and closes near the low of the F period, I said that it is struggling despite doing this back in filling to take the high. So at that point I knew that this was in danger. Now the rotation happened and it took it with very, very, very high momentum. The I period went all the way down. And the surprising thing for me is that it takes the AD low, it keeps going lower, but it stops short of touching the 23.25 low and the 20.50 area. When you know this is the low of the range, it came short from that. It started bouncing from there, and on the next period, we leave a poor low and we bounce back, close the double distribution, and go back up. Now, if you were holding a short position into this break, the warnings for you were the following. The moment J, which is the immediate next period, closes the double distribution, you have an alert that there's something going on. When J reaches halfback, this was an area of struggle, but you should have noticed that J was not giving back much. It was going through the 42 to 39 area, back and forth, back and forth, back and forth, which is the upper 25% of the period itself. So no give back. Then at the point in time when K pushes up and takes the J high, at that point you know that the upside is meaningful. And despite having a poor low, you should not be holding any short positions, and I hope you didn't. Oh, well, and what happened later is you have that push back into the value area. So value was overlapping, and you will notice something interesting as well. You see that yesterday's profile, it's kind of smooth at the top, and then there's kind of a hole in the middle, and then it gets smooth again. Well, guess what? Today, if you add the profile, it added the belly that needed that profile. So we kind of have a balancing and validation of yesterday's profile with a probe lower. So far, this is technically a failed break below Wednesday's range, and it should be taken as such unless we start getting acceptance back in the double TPO area. That means below 34. So the focus for tomorrow is on value development relative to today's value area. I would say that acceptance above the high, the M high, will increase the odds of continuation higher. And by the way, if that happens without going lower, you will have daily excess, which is visible on the daily chart. You have this little bit of excess here. So acceptance above the M high will increase the odds of further upside, at least some relief on the pressure of the market going downside. However, if you start getting acceptance, as I just mentioned before, below the 34 area, I think the odds are pretty good that we're taking the 28.20, 28.23 area. As you know, anything can happen. We can move very fast and very harsh from one second to the other in the presence of news related to the trade talks and the FOMC expected actions. Anything can happen, but let's say today we have a failed break, probe lower, further weak structure, and my take is let's not concern about this weak structure unless we start heading back down. So far, we have failed getting away from the Wednesday's range. So let's keep it that way.